What an absolutely insane 24 hours. This is the worst market pullback we have seen in a long time, a very long time. Some of you might not have ever seen this sort of blood in the market before, but I'm here to tell you that potentially it is over. Let's discuss what is happening in the market right now so you guys can be fully up to date. We're going to figure out why on earth this is happening, what caused it, is the bottom in, and is there a saving grace that is about to hit the market that you guys need to know about. Now, I have hinted at this on the channel over the last couple of days, and we may be getting just that coming in. So let's discuss, first of all, looking at Bitcoin. We can see the bull flag, guys. If you've been watching the channel over the last 3 weeks, 2 weeks, whatever it is, since we were up here, we had the double top, guys. I told you this was the opportune moment to short if you wanted to short. I'm not telling you I have a crystal ball because I did not short this move. I actually shorted it around here and I was wrong and everyone called me an idiot and then my position was stopped down and I didn't open the short again, which was my mistake. But as traders, we learn this. And I was telling you guys that coming down to the lower region of this bull flag is very much in play. Now, this is exactly what has happened. And including of that, and on top of that, I also told you that Bitcoin dictates the market. So Bitcoin coming down obviously affects the rest of the market. And the altcoins are absolutely wrecked. My altcoin portfolio is absolutely wrecked. The only thing that I have keeping me afloat is the fact that I was taking profits when the market was euphoric. I did not take enough profits to completely shield me from this pullback. I would have liked to have taken more profits. I did not believe the bull market was over. I still don't believe the bull market is over, but time is going to tell. In fact, we are at an incredibly pivotal moment right now for the price of Bitcoin and this bull market. So looking at the bull flag, we have lost the support. Bearing in mind, this is a daily candle, right? A daily candle right here. We have lost the support. We have also briefly lost even this lower band of support, which I did tell you I believed was our lower region. This was the bear case and we are in it right now. So this could be signaling, our first signal, that this pullback is in fact over. This right here was the max pain event that I believe could still play out and us still stay bullish. So what we want to see here for us to remain biased on the bullish side is for us to push up and regain this support. That's all we want to see here. So we want to push up and regain $53,000. Now that is a pretty easy thing for us to do, but if we do start to push upwards, it may very well just be a dead cat bounce. So if you guys do want to prepare yourself and you actually want to start going short on this market, the exchange that I personally use is MARGEX. You can use this to go long or short depending on what you think will happen next, and you can do this from anywhere in the world. So you guys can sign up to MARGEX from anywhere in the world. You can get yourself a $10,000 deposit bonus, and if you think we're going to continue downwards from here, you can start shorting the market. For me personally, I'm looking and I'm deciding what I think is going to happen next. But if you are looking for a place that you don't need to provide any personal details or KYC and you can access from anywhere, MARGEX could be a good option for you. So I'll leave a link to it down there in the description. We do also have a CME gap now above us. So the CME gap that I was speaking about on the channel that I actually shorted Bitcoin for was 58,000. I shorted it up in the 60s and I was aiming for 58,000. We are significantly below that. But in doing this, we have created a new CME gap between 59,400 and 62,550. So this is the exact opposite scenario playing out. This is another key factor that could show us that we are going to push back into our bull flag and head upwards. Now, of course, we have a lot of fear in the market. The reason the market is crashing: Trump presidency odds decreasing, recession fears, stock market correction, yen unwinding, geopolitical tensions, Jump unwinding their positions. They were selling millions of dollars of Ethereum every hour yesterday. Mt. Gox distributions, of course, people are forgetting that, yes, their wallet is down is because they distributed it to people and they probably had it. And because of this crash, it added fuel to the fire. Like we were talking about, stop losses, liquidations, more capitulation, more panic, rolling. Everyone's selling. And the people who had their Mt. Gox Bitcoin were probably like, forget it. I'm going to get rid of it all. So this would have added fuel to the fire. To add on top of that, guys, we had tons of long positions in the market. Now, these are completely wrecked. This is exactly what we were waiting for. Exactly the piece of data that I have told you time in, time out pretty much dictates where the market is going to go. Now, right now, in this moment, the majority of the market is short. We have $14 billion of shorts sitting below the old all-time high that will get liquidated at 70,000. $14 billion. We have almost nobody going long in this market. What do we say time in and time out on the channel? The majority of traders are wrong. The majority of retail is wrong. Yes, we are retail, but we have data like this that we can look at objectively and decide what we want to do with it. This shows us that most people in this market are short on the market. When we see that, I ask you a question. Are most people normally right? That's it. I'm going to leave it there. The answer is no. Most people are always wrong in this market. And look at this, $14 billion, guys. And there's one thing I want to say. Germany is currently the best crypto trader of 2024. A hell of a lot better than me, I must say, because they were selling Bitcoin right at the top. So congratulations to Germany. And guys, $1 billion of crypto liquidations in the past 24 hours. $1 billion is what caused this crash, right? $1 billion of fear, uncertainty, and doubt. And that is just on the liquidations. There was also people closing their positions, people going short, people selling, people capitulating. All of that created our new Black Swan event. This was the event that could be the one we were waiting for. Now, guys, I want to remind you, in the last bull market, where is it? There. Look at this. 38% down, 38% down, 33, 38, 36, 29% down. And if we do jump over, let's flip this into the weekly right here. Let's zoom out here, guys. And I want to remind you, I know this is scary. It is scary for me as well, but this is normal for a bull market. Look at this. From here to here. This is, I'm pretty sure, where China banned crypto mining, which really doesn't make any difference, does it? 56% down. We were down there for a couple of weeks, and then we went on to make new all-time highs. Right now, we are only down 32%. Now, yes, I do hope that this is the bottom. You can see here, look at this. This is a push upwards, an initial pullback, and then the next high, right? We came all the way down to retest the exact lows that we saw here. What's happening? We had our push up, we had a pullback, we had our new highs. Now we have pushed down to retest this region. So between 41,000 and 51,000 is now the region I'd be looking for this flip now of the market. Of course, I do hope that this is enough support for us to head upwards, but it depends on what happens today. We have a massive thing happening today that could change the course of this panic. US Fed to call emergency meeting to rediscuss interest rates. The probability of the rate reduction rises to 100%. All right, guys? This is what we were saying in the live stream yesterday. We may actually, right now, have the Fed come in and reduce rates to the point where the market is actually excited again. Maybe they do significantly more than what anyone is expecting. They have waited too late, and we are scared we're going to go into a recession. The market is scared. The overall stocks and shares market, not just crypto, is absolutely obliterated right now. Look at this. Google, 11% pre-market. Nvidia, 11%. Apple, 10%. Meta, 10%. Tesla, 10%. Amazon, 10%. Microsoft, 9%. Before the market opens in about 1 hour. All right, so 60 minutes from now, the market opens, and all of these stocks are going to get absolutely annihilated. And of course, the ETFs are going to fall, right? Because they've been closed, which is absolutely wild. The weekend being closed in this day and age is absolutely wild. But guys, we do have a potential that they could come in and cut interest rates, which I actually think will send a relief rally into the market. Will it be sustained? We don't know. But if that relief rally happens, you can then look at your portfolio and decide what you want to do. If we do get this to come out, this may stop the recession, which actually will just be kicking the can down the road. The market will forget, and then we can go off and enjoy our bull market for a couple of months. Then it will end sooner than everyone expects, and then we'll be back in turmoil. That's what I think will happen. That's what I'm bullish on. That's what I'm biased on because I want it to happen, but only time will tell. Now, I'm going to leave you this video from CNBC talking about these rate cuts potentially.
We've talked about quite a bit. It was down in the low teens, up 26 points a day. It's been over 50 at one point, 49.80. And earlier, Tom Lee said when we see the VIX peak and maybe come down a little, that could indicate some type of bottoming. Joining us now is Jeremy Siegel, Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business, Chief Economist at Wisdom Tree. Jeremy, I hate, you probably aren't happy to say I told you so either, given what we're witnessing. But you thought the Fed was staying at, once again, for the second time, staying at the party too long and too restrictive.
Absolutely. And, this may surprise people. I'm calling for a 75 basis point emergency cut in the Fed funds rate with another 75 basis point cut indicated for next month at the September meeting. And that's minimum. The Fed funds rate right now should be somewhere between, 3.5% and 4%. Let me give you very simple logic of my position here. At the June meeting, the Fed has said that the long run Fed funds rate, when inflation reached 2% and unemployment has come up to 4.2%, should be 2.8. That's the normal. 2.8 is the normal Fed funds rate. Well, on Friday, we blew across the employment number. We're at 4.3. That even argues for a lower one. Now, as far as inflation, we're at 2.5%. We've gone down 90% towards the target on the inflation rate. We've overshot the target on the employment. Those are the two targets explicitly mentioned by the Federal Reserve. All right, and how much have we moved the Fed funds rate? 0. That makes absolutely no sense whatsoever.